Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Lots of people want to acquire lots of real estate, but sometimes run out of money and credit. What do you do then? You can stop or you can keep going. We'll show you how today on the Real Estate Guys radio program.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms. So glad to have you with us today. With us, as usual, financial strategist and our co-host, Russell Gray.
Hey, Robert.
You know, so many people get interested in real estate investing and they flitter around and find podcasts like this and books on real estate investing, and they really want to get themselves into the game. And then, of course, we have listeners that have been listening for years that own lots and lots and lots of property. But everyone eventually reaches the same spot in their real estate investing career. They run out of capital, or they run out of their ability to get loans, or they run out of qualification. And, you know, they have two choices. They can say, well, that's it, I'm good, or they can keep going. And today we're going to talk about how they can keep going.
Yeah, you know, we talk about this all the time, and we see people get to that point of frustration because they get excited about real estate. They spend the time studying a market, learning a particular product class. They organize their finances. They do all the hard work of their due diligence and all the things you have to do to be an effective real estate investor, building the team and all of those things. And most of those activities for the mom and pop investor aren't leverageable. And so they do a little bit and they chug along, and then they work hard and they pay their taxes and they save their money living frugally and try to get to that next down payment. Maybe they manage the property for profitability, and then they're able to refinance, pull a little equity out, kind of do what we used to call the old free duplex story, repositioning equity and kind of keep the ball rolling. And that's great. There's nothing wrong with doing that. It's just a little bit slow for some folks.
Yeah, it's slow, and everybody's different, right? We talk a lot about personal investment philosophy. For some folks, they're busy doing what they want to do to live, thrive, and survive. And on the side, they're investing in real estate. They might buy a house every 3 years. They might buy a house every 3 months. But they're just acquiring a portfolio of real estate that can serve them and their family for years and years and maybe even generations to come. But if you hit this point of frustration, you're like, you know what? I can't go fast enough. I bought a house and everything's great. I got a tenant in it and it's a beautiful house and it's making $300 a month positive. But, you know, that's not that much money compared to my dreams and hopes and aspirations. How can I go bigger? Well, the answer is through using other people's money, what we call real estate syndication. And syndication is just a fancy word that is aggregating other people's skills, other people's relationships, and other people's capital.
Yeah, you know, here's the key. If you're going through life and your approach to life is, as I said, you work hard, pay your taxes, live below your means, and save money and invest, if you have great earning capabilities, then maybe that's good enough. For the average person, especially the people who get interested in real estate investing, they get interested in real estate investing because they look at it as, hey, I can get rich quick. I can flip a house. I can do wholesaling. I can find ways to add value, force equity, and make money. Sometimes people get very speculative. And of course, the problem with speculation is it's great when it works, but when it doesn't, it's a two-edged sword, and it can take a lot of your net worth away from you pretty quick. So what syndication allows you to do is, instead of putting your focus on earning and saving money, you put your emphasis on raising money from people who earn more money than you do, save more money than you do, and they have a different problem. Your problem is, I don't have enough money to work with. Robert Kiyosaki told us on last year's Investor Summit at Sea, trying to explain to people, look, when you go talk to people, about helping them and raising money from them, you can't talk to them like they're you. They don't have your problem. He goes, I don't have your problem. My problem isn't trying to figure out how to make money. My problem is I have too much money. You need to talk to me about tax breaks and things that I can do to park all of this extra money I have. There are people out there like that. And syndication allows you, as somebody who says, I need more money in my life, to go attach your hustle, your effort, your skills, your network, your willingness to work to other people who've already figured out how to make a ton of money, and they need to put it to work through somebody just like you.
Such a good point, because there's really two audiences, if you will, for today's program. And I hope you haven't checked out already because you're thinking, well, I'm not really into raising money. Here's the two audiences. Audience number one, that real estate investor we're talking about who has eyes bigger than their checkbook, who decides, you know what, I could apply my expertise and my market knowledge and my relationships to more deals if I had more capital to work with. That's person number one. And there's lots of people in our listening audience and beyond that who are that person. On the other side is the person that says, you know what, I've invested in single family houses and retail strip malls and apartment buildings for long enough. I've walked more properties than I care to, dealt with more property managers than I care to, sat in too many tax offices and lawyer offices. You know what I'd like to do? I'd like to just give my money to somebody who's going to do all that work. I'll make some money. They'll make some money. That's the passive investor.
So, Robert, it's just like in venture capital. You find these entrepreneurs, like say out there in Silicon Valley where you and I lived for years, and these guys go out, they start a business, they work hard, they develop it, they take it public, they make millions and millions, tens of millions, hundreds of millions, in some cases $1 billion. They don't want to go do all that again. So they become venture capitalists. They become like the guys on Shark Tanks, and they're looking for people who are got great ideas, who are willing to go work hard and to be who they were at that stage in their career, but don't want to be any longer. They just want to be the provider of the money. They want to make a good return on their investment. And that's really the symbiotic relationship that you have between the real estate entrepreneur through syndication and the real estate passive investor through syndication who's looking to profit through private placements.
So let's talk about how it works. And it depends on which side of the fence you're on, but this conversation is for both. Whether you're that passive investor that wants to get some money to work where you don't have to do the work, or you're that person who is actively pursuing real estate deals and would love to do more, but you don't have capital. In the perfect world, there'd be some great matchmaking service where everybody could be vetted and all of that. And there's folks who are playing around with that idea. But really on the street level, how it works is you have to find folks that satisfy your opposing need. So if I have money to put to work, I've got to find great practitioners who are out there doing projects. If I want to do projects, I have to find the right folks who would make good investors, partners for a property or a project I might be interested in. That's the premise. But the minute you start thinking this way, first, congratulations, because that is the way that most of the serious wealth gets made in real estate. Very, very few large transactions, big shopping malls, 300-unit apartments, very few get purchased by a single person. It's usually a syndicate, a group of people that go together. So there's all this opportunity out there. The world opens up when you'll open up your horizon to say, I could be part of or I could do bigger deals. But the minute you cross over that line, on both sides, there's some things you need to be aware of. And I think first, let's just talk about the things you need to be aware of if you're investing your money. If you're investing your money in somebody else's deal, you need to vet the person, you need to understand the market, you need to go through their business plan, you need to think about all the what ifs, the things that could go right, as well as the things that could go wrong.
You know, it's really interesting, Robert, that you bring that up because I find it so interesting that people who invest in paper assets in the stock market, they buy mutual funds and ETFs and derivatives and bonds and all these different paper asset products they buy through their stockbroker. And because the broker says, hey, this I think would be a good investment for you, people buy it. And they don't do any of the homework.
Right.
They don't do any of the due diligence. They don't understand. I know because I used to sell mutual funds. And when people would ask me questions, of course, I read the entire prospectus, front to back, and I understood what the investment objective was, what its history was, what the underlying investments inside the fund were, what the risks were, because you have to put all that stuff in the prospectus. But so few, if any, clients ever read it. And yet we recommend, hey, when you're going to invest in a private placement, you should do your homework. We should do the same homework if you're going to invest in a public security as well. You'd think that arguably it'd be easier to get the information. The challenge is that most investors, many investors, I should say, are willing, and I think not wisely, to invest in things that they don't understand with people they don't really know. And I think the point of that, Robert, is your point, which is that you do have to spend time to get to know who you're doing business with and whether or not you trust them ethically, and whether or not you trust them in terms of their ability or their capability, their competency to be able to execute on whatever business plan you're looking at. The second thing you have to do is you've got to look at the deal and you have to ask yourself, does this deal make sense to me? The great news is whether you're on the investor side and you're just looking to place your money with somebody, or you're on the syndicator side looking to attract money, in both cases, if your underlying investment is real estate, the average person out there can look at a real estate plan and understand it. They understand what the business model is. They understand what the product is. When you explain to them what the risks are, they can understand that. You show them the financing scheme and what the income plan is and all of that. The average person with just a decent level of business savvy and life experience can look at a real estate opportunity and understand it. And I just think that's such a huge advantage for the people on both sides of the equation.
It sure is. And the other added benefit of going through the work up front, if you're that person looking to invest your money, is if you find a great syndicator, a great promoter, a great sponsor, all interchangeable terms for that person who puts together that deal, then you have a horse you can bet on. You know, put your foot in the water, maybe invest a little money, see how it goes. If it goes well, hey, give them the ball, let them see what they can do, as opposed to every day waking up having to find a new deal, or in this case, a new person to do the deal. So that's really on the investment side. On the other side, on the side of, hey, I've got some experience, I know some markets well, I've been doing well on my own account, I'd like to open that up to friends and family, or complete strangers, or real estate investment funds, or family offices, whatever it is. Now you've got a whole new duty, and that's the duty to learn the business and also to understand the legal side of it. When you raise money from other people, it's a new ballgame.
Yeah, it certainly is. I mean, there's laws that were designed, I think, with some of the influence of the financial services industry to prevent up-and-comers from competing with them. But whatever the motives were, for the longest time, it was very difficult for private investors to invest in private placements. You had to have a pre-existing relationship, and there were limitations for the person who had the offer to take it to the public. And so that got lifted a few years back, and it took what was already a great opportunity and opened it up even more, again, for people on both sides. If you're the person putting the deal together, you now have the ability to go out and promote your deal to accredited investors that are looking to find those kind of deals. And if you're an accredited investor out there, the world of opportunity opened up for you, because now all of a sudden all these people that have these deals that maybe you've driven by on your way back and forth to work or around your neighborhood, you go, God, I just saw that apartment building go up. Somebody made money on it, but it wasn't me. I wonder how you get in on that. Well, this is how you get in on it, because a lot of these things get put together through private offerings. And so now it's possible for you to get into the network and find out what's going on. Now, a lot of people are trying to do that through crowdfunding. And, I'm not necessarily opposed to crowdfunding, but what I think that the technology concept behind crowdfunding has done is moved it a little bit more to making it like Wall Street, where it isn't quite as human. In other words, the emphasis is on convenience. It's being part of a big crowd. You're a number, you're an account number. You're not a human being. I much prefer having tighter deals where you're dealing with people that you know, that you understand. You get a chance to go look at the deal. I mean, it's just, to me, it's a lot more personal. It feels a lot more human. And in a lot of ways, I feel like it's a lot safer.
And it really is opportunity we're looking for. We're looking for the greatest way to get people together, do bigger deals, make better returns. But that caveat is it does take a little work to learn it. And you got to learn what it takes to put a syndication together. And then you got to be real careful about the legal side, because that is not our expertise. We are not attorneys. We don't even play them on television. When we come back, you're going to hear from attorney Mauricio Rauld. This is what he does in his practice as he helps people raise money. So whether you're thinking of investing alongside a bigger deal or putting one together, you're going to want to pay attention to what Mauricio has to say today on the Real Estate Guys radio program.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Are you ready to profit in paradise? Hi, it's Robert Helms, and if you think real estate investing means tenants, toilets, and termites, think again. Located just a short plane ride from the U.S., a virtually untouched paradise awaits, the beautiful country of Belize. When you go to Belize with the Real Estate Guys, you'll spend 4 fabulous days discovering one of the most intriguing real estate markets I've ever seen. With its jungle rainforests, pristine beaches, and 81-degree turquoise water, Belize is one of the most beautiful places on earth. Plus, it's considered one of the top 7 tax havens in the world. Belize property is on the rise, and many experts think the best is yet to come. But don't just take my word for it. Come experience Belize firsthand at our upcoming investor field trip. When you join us, you'll discover the many reasons we love Belize, like tremendously undervalued beachfront land, super low taxes, ease of doing business, and so much more. Get the details at realestateguysradio.com. Just click on events. See paradise for yourself. Click events at realestateguysradio.com, and I'll see you in beautiful Belize.
For investors, timberland has become the symbol of safety. Global tropical timber demand continues to surge as the world's population increases. The need for managed, sustainable timber production forests has never been greater. When stock markets crash, trees keep growing. Direct ownership of fully managed tropical timberland acreage is now available to accredited investors. Prime valuable hardwood groves close to the beautiful Costa Rican border generate and maintain superior long-term wealth. Qualified, accredited investors should email timber@realestateguysradio.com for more information. Consider visiting our forest plantations to see for yourself. Email timber@realestateguysradio.com. This announcement does not constitute either an offer to sell securities or a solicitation of an offer to purchase. Offering made by prospectus only. For more information, email timber@realestateguysradio.com.
Hi, this is Steve Forbes. You're listening to The Real Estate Guys. Have fun. You'll learn something.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show, however you're doing that. If you're mobile, if you're sitting there listening, if someone told you about us, thanks for that. You've picked a great show. We're talking today about the idea of partnering together to invest. It's a word we use called syndication. And with me, back again after many, many times on the show, welcome one of our favorite guests, attorney Mauricio Rauld. How are you?
Thanks, Robert. Always good to be here.
Yes, indeed. Always good to have you here. And of course, at the events and seminars and things we were just talking about, this is going to be your 10th Investor Summit at Sea this year.
That's right. I get the X, the peppers. I get the X peppers on my thing. It's going to be exciting.
That's
Looking
awesome.
forward to it.
Hey, we were talking about this idea of syndication and what that is, but as soon as you start talking about taking money from somebody else, instantly, ding, 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 red flag, talk to your attorney. That's why you're here. Tell us from your point of view, what does it really mean to do a syndication in real estate?
I mean, a syndication, quite simply, is the way I view it. It's just the simple pooling of resources. And usually it's money and capital, but it doesn't have to be. I mean, it can be time, relationships, credit. There's a lot of things. But essentially, it's the pooling of resources for you then to go acquire an asset, whether it's real estate or anything else. But it's just that simple process. And I always like to give the example of, let's just say you're buying a piece of real estate for, let's say, $100,000. You get 4 of your buddies, each put in $25,000, and then you put in the time, the energy, you find the deal, and you become the 5th person, and you split everything 5 ways. So that's kind of a really basic syndication that just kind of gets your mind around it.
Okay, great. So you're going to go to the trouble to find the deal. You're going to get some folks, say, hey, would you like to come alongside? They're going to write a check. The minute that you did that, the minute that you took a check from somebody, now you're in this area of securities law in the U.S. Now, other countries also have similar laws. Some countries don't have any laws. We have listeners in over 190 countries, but most of our listener base, U.S. and Canada. So let's talk about the securities issue when you raise money.
Anytime you take money from individuals where you're the managing portion of that, you're managing their funds and you're giving your investors a return, and that return is generated from your efforts, you're dealing with a security. And the actual structure doesn't matter. So whether it's a company that you set up, or if it's a TIC agreement, or if it's a handshake, or it's a profit sharing agreement, a lot of people try and get around the securities. Like, well, I just won't set up a corporation, or I won't set up an LLC. But that's not how it works. Anytime you are managing other people's money where your investors are passive, you are dealing with a security, which then means you have to comply with the world of securities laws.
Which sounds scary, but it's completely doable. And that's why we love having you come out to our syndication event, because you demystify it a little bit, and we won't get completely into the weeds. But the premise is that the Securities and Exchange Commission in the U.S. regulates these types of investments, and anything where you pool together resources kind of falls under that. So what are the things people need to be aware of if they're thinking, hey, syndication sounds like a great idea. I have some friends. They've asked me about investing in, real estate because I'm doing that and we'd love to come together. What do I need to know?
So there's really only three things you need to know, sort of big picture context to keep it really simple. Anytime you're dealing with a security, you either need to A, register that security with the SEC, the Securities and Exchange Commission,
Okay.
or B, you have to find an exemption to registration, or C, it's illegal.
Okay.
It's that simple. You never want to register the security because, number one, it's going to take you years to do. You're dealing with the federal government. They don't exactly turn everything around in 24 hours. So expect a 1 to 2 year process, and it's going to cost you 6-7 figures. And so we always joke, when you have a property under contract and you've got to close in 30, 60 days, you just don't have time to go through that process. So whenever possible, we avoid the registration.
Now, let's just stop for a minute because it's not that you can't register a security. In fact, many companies do, but they're usually for tens of millions or hundreds of millions of dollars. If we were building a new hospital downtown and we were taking institutional money from big hedge funds and REITs and things, then we would register a security. Or a company that issues equities, shares, that's a registered security, and it's a process. So why it is an option? What most real estate investors do is B, they look for an exemption so they don't have to register.
That's exactly right. So fortunately for us, there are several exemptions that most people will fall in that category. And luckily for us, they're very accommodating. So there's little restrictions about the amount of money you can raise. I mean, there are certainly some restrictions, and we can certainly go into there. But I always like to jump to the third part because we definitely don't want to be doing illegal offerings. But when we talk about illegal offerings, we're not talking Bernie Madoff, right? We're not talking about somebody committing fraud, coming up with a scheme. It can be something as simple as failing to completely disclose information or putting together numbers and pro formas that might be a little bit, let's say, optimistic without really fully painting the entire picture.
Yeah.
And so we want to be cognizant of that. But yeah, the exemption is where I live. That's what I do full time, and I help investors find the proper exemption and then structure their syndications so that we fall within those guidelines.
Now, if you're thinking about doing a syndication, certainly you want to get your mind around the major exemptions and what you'd use. But I tell you, my favorite thing to do is to have an attorney that knows how to guide me in it, because every deal's different. Part of the idea of a syndication is the folks who invest passively want to be passive. They don't want to spend a lot of time. They want to vet the deal, the market, and the syndicator, a person we might call the promoter, who's doing the deal. But for the most part, these types of investors aren't looking to roll up their sleeves and work on property. Like, I want to put $100,000 to work. You seem to be doing a good job. Here's my money. I'll tell you what I often encounter is the folks who they come say to our event or they get your report about it and they go, oops. Like I did a deal and I brought my buddy in and it was C. It was a security. And I will tell you in all honesty, a couple of my first deals were just like that. And we had what we call the good deal defense.
That's right.
Right? Everything came out okay. People got their money. They made a return. But pretty quickly, I discovered that, hey, there are some rules, which is why we want to make sure everyone knows.
Yeah, and unfortunately, once the cat's out of the bag, you can't put it back in. So
Right.
once you fail to follow the securities laws, you can't come to someone after the fact and say, hey, I did this wrong. Can we fix it? You can't fix it. Once it happens, it happens. So, but that happens a lot, especially after the events that we do. We'll have people come up and say, man, I've been doing it wrong all these years. But the golden defense is definitely a defense that people use, but it's not something I would rely on, obviously, moving forward.
Well, no, definitely not. And that's really why we want to do the show today, because in the audience of Real Estate Guys listeners, I would say it's probably the minority who are actively doing syndication or interested today. But I will tell you, as Russ and I were talking about, is kind of the natural evolution of a real estate investor. You could just own property in your own portfolio for years. But if you get the bug, if you get excited about it, if you run out of your own resources, this is kind of the next step. And, I often tell people that we're not, real estate gurus. We don't get on the speaking circuit. And although you might hear us come speak at an event, that's not our business model. But the one area that we specialize in our personal lives, of course, we don't talk about this a lot on the radio, is that we do real estate syndications. You've been our counsel for years. And seeing people do it wrong and get into trouble is the worst thing, when an ounce of prevention can have you in the right place with this. And that's what the critical part is. So let's talk about the process because you're going to have a lot of legal paperwork. And take us through what it looks like from the investor's point of view. If I'm an investor and I'm looking to invest in a syndication, because that's the other side of the coin, the folks who come to our syndication event, many of them are interested in investing alongside somebody, being that passive investor. What are the things that need to be done? What are the boxes that need to be checked?
Yeah, there's a few. I would say probably the number one box is obviously to do your due diligence with the sponsor, right? There's probably no more critical factor in making sure that the person that's putting the deal together has a track record that's done this before. It's not their first rodeo with your money, right? And that's just this easy information that you can get from the sponsor and find out what they've done in the past, so that again you can see somebody who's got a track record. Our good friend Kenny McElroy has a great track record. That's why people give him money. If it's a first time syndicator, maybe you want to shy away, or maybe you want to wait until they've got some kind of track. So track record is huge in my mind.
Yep.
The other big red flag is the documentation, the paperwork. I don't usually do it, but often clients will come to me and say, hey, I'm thinking about doing a particular syndication, investing in somebody else's deal. Do you mind looking and reviewing the documentation? And you will be amazed at how many red flags will pop up by what I see.
Yeah.
And sometimes I don't see anything, and that's part of the problem. They don't give you all the disclosure documents, and they come up with 1,000 excuses as to why they don't have a private placement memorandum, which is a disclosure document, or they don't have this, or they don't have that. And at the end of the day, that's cutting corners from the sponsors. And so if they're cutting corners on the paperwork, what else are they cutting corners? And time after time, I've seen this where I've sort of made the recommendation and said, look, it's a red flag. They don't have all the documentation. Sure enough, 2 years later, I'll get a call from the client and say, look, hey, it's going south. So it just happens. So to me, that's been a good experience for me to just kind of identify those red flags.
Yeah, it's important. Real estate, in any real estate investing, nobody bats 1,000. The deal may look good, the market may be great, and things change over time. So we want to go in optimistically. We want to look for opportunity to see return, but we also have to realize that a handful of deals aren't going to go right. It really exacerbates that when you have other people's money, because all of a sudden your friends and family turn on you, and you want to handle that relationship part for sure, but the legal part has to be in place. And so this isn't meant to intimidate anybody or scare anybody away from doing it. Quite the opposite. Many attorneys who do syndication, they make it this big, hairy thing that you have to go through, because in a lot of ways they're just justifying the fact that they need to get in there and get under the hood, and you need to have that happen. But what I appreciate about you, Mauricio, is that you're, kind of joke and call you the anti-lawyer. You're on the side of the syndicator. You want to make sure that they can get this great deal to marketplace and not have to be dealing with all the baloney that's going to happen because this form wasn't filed or this wasn't filled out properly. So even though the paperwork varies, and we're not going to get completely into the weeds on what that looks like, you mentioned a private placement memorandum. This is a specific legal document that has a purpose.
Yeah, it's very similar to when you go see your doctor and you have some type of a medical procedure. I had oral surgery several years ago, and they gave you that medical consent form, right? And it shows you all the ways that you can get, you can die, you can have infections, and they just lay it all out there. And of course, you're reading this and you're like, well, the odds of that happening are slim, but it's something that you need to review and sign. That's really what a private placement memorandum is. It's a disclosure document that just tells the investor, hey, this is a risky investment, or here are the risks of the investment. Here's what you need to be aware of. Yes, I believe it's going to go great, but these are all the ways you could lose your money and go south. And so it's sometimes a scary document. I always encourage my clients to make sure that by the time they are showing this document, this private placement memorandum to their investors, that they've done a really good job of selling their deal with their business plan and talking to them, because no one is going to be investing in your deal solely based on your private placement memorandum. If anything, it's the opposite. They're going to get a little scared because it's all the ways you can lose your money.
Well, and it is specific for every deal. This is another big point. When you pay an attorney to do your documentation, it is a substantial amount of money because it's a substantial amount of work. When you go through and do a private placement memorandum, it is specific for the deal. So you mentioned the risks. Every deal has kind of the generic real estate risks. Hey, private properties do go up and down in value, but also specific risks of the product type. If it's new construction or rehab, the insurance is in place, the promoter or the sponsor and their history, the other investors. I mean, every deal's different. And so you want to make sure that this document is complete. And that's really your job. As a securities attorney, you're looking at what could go wrong, even though you're focused on what's going to go right.
This is one of my biggest pet peeves with either other securities lawyers is that they don't spend the necessary time up front talking to the client and trying to find out about the deal itself. They either send out a questionnaire to get information, or they literally spend 5 minutes with the client and then they put together the documentation.
Yeah.
The documentation is critical, but in order to do a good job finding out what the risks are and associated with the deal, you've got to spend time with the client ahead of time. I mean, I underwrite every single deal as if I'm an investor because I need to ask all the questions. I need to find out where all the risks are. I need to find out what possibly could go wrong. A lot of times, sponsors don't think of things and they just here's the deal. And so by asking a lot of questions, you're able to pull out what the risks are for this particular deal. And then armed with that information, I can then go and put that into the documentations and be able to provide a complete disclosure. But, if you don't spend time with the client up front, how do you know what the risks are of that particular deal?
Our guest today is attorney Mauricio Rauld. We're talking about real estate syndication, putting together bigger deals and doing it right and legally. We'll continue the discussion when we come back, and we'll play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Forbes rated Memphis the best cash flow market in the nation. And our good friend Terry Kerr at Mid-South Homebuyers has been the premier turnkey rental property provider in Memphis for over 13 years. With an A+ rating from the Better Business Bureau, Terry has renovated over 750 houses. Real Estate Guys listeners have snapped up hundreds. Discover what these satisfied investors already know. Mid-South's properties are completely renovated with a 1-year warranty and a lifelong rental guarantee. They're affordable, well-managed, and easy to own. Perfect for beginning investors and veterans alike. Get in on the action. Contact Terry and his team via email at midsouth@realestateguysradio.com.
If you want to retire in the next 5 years or less through real estate, then please pay close attention. My name is Brad Sumrock, and I've taught thousands of my students how to replace their incomes, quit their jobs, and retire faster than they ever thought possible by not investing in single-family homes. You see, there's a secret to retiring fast with little risk, and it has nothing to do with being a landlord, fixing toilets, or flipping houses. The secret is multi-family apartment buildings. Starting from scratch with zero experience, I managed to pocket over $1 million in cash and retire from my 17-year corporate job within 3 years of apartment investing. Now, this is not your typical no money down real estate training. We believe in smart, hard work for intelligent people. So if you're good with your finances, have a decent job, or saving your money, and you're looking for a change and getting out of the rat race, then investing in apartment buildings might just be the answer you've been looking for. Send an email right now to sumrock@realestateguysradio.com to get the details of my upcoming training event, and you'll also receive my free training webinar, Apartment Investing for Beginners. That's Sumrock, SUMROK, @realestateguysradio.com.
Hey, it's Ken McElroy. I listen to the Real Estate Guys, and so should you.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show today. Great topic when you get stuck because you don't have enough money or you don't have a great deal and you want to put some money to work. Real estate syndication is something to consider. Great to have Mauricio Rauld with us on the program. We'll continue our discussion with Mauricio after we play real estate trivia. That's your chance to win a prize by knowing today's real estate trivia question. In just a minute, I'll give you the question, and then your mission, should you decide to accept it, is to send an email to trivia@realestateguysradio.com, trivia@realestateguysradio.com with your name, the answer to the question, and your mailing address. Because if you win, that means you're the first person with the right answer. You're going to get a prize, and it's a prize we've never given away before. Often in the prize, of course, is a great book, and today we have a great book that's just been released. It's called Life-Defining Moments from Bold Thought Leaders. Includes 28 different authors, including some of our great friends like Kyle Wilson and Ruben Salazar, and the godfather of real estate, Bob Helms, even has a chapter in this book. That can be yours if you know today's real estate trivia question. Last week on the show, we were talking about forecasting the future. We had a powerhouse of folks on the program, Robert Kiyosaki, Chris Martenson, and Adam Taggart, Peter Schiff, Brian London. We asked this: the first Winter Olympics Games were held in France in 1924. Since then, which country has won the most medals at the Winter Games? Well, if you've been watching any of the Olympics, then you know it's Norway. Not counting this season's Olympics, 263 medals. Here's our real estate trivia question for this week. There's a tradition in the country of Scotland where at some point in the ownership of a home, you paint the front door red. So if you were to drive around Scotland, you'd see lots of houses with their front door painted red. What's the significance of that? What does it mean if a house in Scotland, and some other European countries do this as well, what does it mean if the front door is painted red? If you know, or you just want to guess, send your best guess to trivia@realestateguysradio.com. Include your name, the answer to the question, and your mailing address, and we'll send the winner life-defining moments from bold thought leaders. That's today's real estate trivia question. We're talking with attorney Mauricio Rauld about real estate syndication. Now, Mauricio, a syndication isn't necessarily exclusively a real estate vehicle. You can raise money to do all kinds of ventures, and these same rules we're talking about apply.
I'm actually doing a deal now with someone who's putting a fund to invest in cryptocurrencies.
All right.
Right. So I always tell people there's two parts to it, right? The part one is actually raising the money and making sure we're in compliance with the securities laws, which is what we're talking about today.
Yep.
And then the second part is what do you do with the money? And so most of the time, most of the stuff I do is real estate related. So you don't necessarily need a particular license to go do a deal in real estate. But if you're going to take that money and put it in the stock market, you may need a broker's license. If you're going to do it in cryptocurrencies, you may need some other type of license. Although cryptocurrencies these days is the wild, wild west.
Right.
But yeah, you can do it for anything you want. We were at a mastermind yesterday with our good friend Kyle Wilson, and there was a lady there who started a bakery or baking goods business, and she was looking to raise money to grow her business, but it doesn't have to be real estate.
Yep, absolutely. So the legal stuff, because every situation is different, rather than spend the next 10 minutes going through the subscription documents, investor question, all that stuff, that's just your homework if you're interested in this. And I want to keep it at a high level also because I think many people get exposed to this idea as an evolution of what they might do in their real estate business. And this can be a very lucrative real estate business. I mean, your clients are people that do it on the side as well as people do it full time. And let's talk about this part of it, which is people often ask, okay, I've got a great deal. I need some money. How do we decide who gets what? How do we split the pie? And because you've sat in the chair where you've looked at literally dozens and dozens and dozens of different deals, just talk about kind of the range of the way you see these things structured.
Well, even before that, it's like, do you structure it in terms of equity or debt? So that's kind of the first thing we look at. And a lot of that just depends on your particular investor pool. Like, what are they looking for? Is it a bunch of IRA money that just wants a fixed return? But then you get into the specifics of, are you going to take something up front sort of as an acquisition fee or a sponsor fee, or what's the split going to be while there's cash flow coming from rents? And then finally, what's the split going to be on the exit, whether it's a refinance or if it's a sale? And those all don't need to be the same. I would say that, probably the majority of the sort of the standard splits, especially on the cash flow, and I think it comes from the hedge fund world, is an 80-20 split. And I think, honestly, I just think that's, the hedge funds usually charge a 2%, right, 2 and 20, right, 2% asset management, and they take 20% of the profit. So, but it varies from that. I mean, sometimes it's 75-25, 70-30, but it really depends. Again, we go back to it depends on the particular deal. If it's a deal that has a lot of meat on it, then you can offer, either less returns, less of a percentage to the investors, because overall it'll be a nicer return. If it's a really thin deal, then you may have to give them a little bit more of a preferred return or something. So those are all things that we spend, again, going back to what we talked about earlier, we spend a lot of time with the syndicator up front to understand the deal itself and then help them structure it so that they do, whether it's a preferred return and if the splits on the back end will be different from the splits during the operation part.
This brings up a thought, which is any licensed attorney could probably do this type of work, but just like I wouldn't go to my family attorney to write a business agreement, you want to stick with someone that really knows this part of the law because there's a lot to this.
I just had a client who was dealing with a local securities attorney. He is a securities attorney, but he doesn't specialize in the type of work that we do, the Reg D, which is, not to get too technical, but Reg D is probably where 95% of these exempt. He just wasn't familiar. Yeah. So you've got to remember, securities attorney is a very vast and big world, including the stock market and mergers and acquisitions and state law. So this is a very specific niche. And so this particular attorney just wasn't familiar with Reg D and these exemptions, so he had to go research it, and the client was going nuts. One call with me, and it's like, I just, we know I do this every day. So he just was baffled. He's like, I can't believe instead of spending 2 hours, talking to this other attorney, it was a very simple process. Because again, it's just something that we do all the time. So there are securities attorneys, and there are securities attorneys, just like, again, you go to the doctor, you may have a specialist who's a heart specialist and somebody who's a gastroenterologist. Two completely different things.
Good stuff. All right, well, back to this idea of how we structure it, because this is critical. And I think one of the value adds you have is, you don't give business advice as an attorney, you give legal advice, but you've seen a lot of business structures. And you, I know, have made recommendations to people, well, you may want to consider this, or you may want to think about that.
Absolutely.
And depending on the deal, right, some real estate deals, you acquire an asset that's cash flowing almost immediately. So then the big question is, okay, well, the cash flow is coming in. How do we split that? And if we say, okay, 80-20 seems fair, I always ask what looks fair. Does that seem like it's a fair investment? The investors are ponying up most of the money, but you have a huge value add when you're bringing the deal. Now, what may happen in those cases is, say I'm finding a deal, and I may not even be licensed, but it's possible for me to have an acquisition fee, and I might get a fee upon the sale of the deal and so forth. But the most important thing when you have any kind of compensation is to disclose. Talk about that.
Disclose. Those are the most important things. So especially when it comes to compensation, you have to disclose. That's something that the state regulators really hone in on. You have to disclose not only the direct compensation, the obvious compensation, I'm getting an acquisition fee or 20% of the profits, but also any indirect compensation. So for example, it's perfectly fine if you are a real estate agent, a real estate broker, to do you're the sponsor, but you're also actually doing the transaction. You can take your common 3-6% real estate agent fee. That's totally fine, but that needs to be disclosed. If your spouse is an agent and they're going to get that needs to be disclosed. Any possible way that the compensation can come back around to you or your spouse needs to be disclosed. And and there's so many different types of compensations that you can do, and that's something that I help clients discover. But disclose. That's the name of the game. You can literally do anything. Like you can literally structure this and be as creative as you want to be as long as you disclose.
And speaking of that, the other premise in syndication, so now talking to folks who are considering investing in a syndication and have their money somewhere. It's in a money market account, it's in a property, it's sitting in the bank, it's somewhere. Most people don't have it in their mattress. And so there's this concept of compared to what? I'm thinking about investing in a deal, real estate syndication, because I'm attracted by the market or the sponsor or the returns, but I've got my money working somewhere. So sometimes sponsors set up what we call a preferred return. And this is the idea where the investor gets some money. It's not guaranteed, but it's preferred, meaning that, let's say the deal made 12%, but the investor gets a 7% preferred return. That would mean of that 12% of cash flow, the first 7% goes to the investor. Then after that, there's a split. So it might be a 7% preferred return followed by a 50-50 split. Or there's what we call waterfalls, not to get too complicated, but sometimes we set up a deal where the first $100,000 a year is 60-40. And then the next 100,000 is 70-30. Don't get overly complicated. People get enamored of these crazy deals. I always say keep it simple and just step back and say, what's fair? What seems fair for the amount of work that you're doing and for the amount of capital people are putting in? What would be fair compensation?
Yeah, I mean, we've learned this by experience. I mean, one of our earlier deals, we did so many different waterfalls. It was almost impossible to explain it to the investors, and so that's the key. Just keep it simple.
Been a clue.
Yeah, so it's a preferred. Just to clarify, so when you do a preferred, really 100% of the money goes to the investors until they hit that preferred return.
Yes.
A lot of people think it's a guarantee or they're going to get that 7%, but if the deal just throws off $100,000 and that just happens to be a 3% return for the investors, they're going to get 100% of that $100,000, but it may only be to 2 or 3%. And then, yes, and then after the preferred, there's typically some kind of a split, obviously, afterwards. And then that split does not have to be the same as the exit. So a lot of people will do sort of an 80-20 split on the cash flow, but then maybe on the sale, it's a 50-50, because by then everyone's got their money back. Same with a refinance. Once you refinance, ideally, you try and give your investors all of their money back, so they're kind of riding for free. So then at that point, if you're doing a preferred return, maybe you take the preferred return away, because again, they've got their money back, so there's no need to continue to sort of give them that preferential treatment. So
that's a great example. And also keep in mind, not all deals are cash flow deals, right? My first 7 or 8 syndications were ground up development, meaning we came together as a group of investors, we bought a property, and then we did the work necessary to develop the property and ultimately sold off the individual buildings. So there was only one distribution. They put their money in, and 2 years later, they got their money back with friends, right? So it doesn't necessarily mean cash flow. A lot of folks assume real estate has monthly rental income. It doesn't always. You can syndicate raw land. You can land bank together. There's a lot of things you can do. One of my favorite things about syndication is how it is virtually unlimited. You've got to follow the rules, and that's the point we're trying to make today. But there's all kinds of ways. So talk to your attorney if you want to do a creative deal, and just make sure you're not uncovering anything that you should be not stepping in.
And one other thing we didn't really talk about in terms of the structuring is you can structure a deal where it's a property specific syndication, where I found a multifamily, it's a 50-unit apartment complex, or you can do a fund, which is kind of when you mentioned the sort of the end game, where you're bringing in the money, you're using that money for 3 to 5 years or however long, and you're going to go invest that money into future deals, which you haven't identified them yet, but at least you've got the money already in your bank account, so then you can go out and actually invest them. So those are, and again, it's a deal-by-deal analysis, but there's just so many ways, which is kind of the fun part for me. You can structure it pretty much any way, and I really enjoy working with investors to figure out what the best structure is for them.
It's interesting watching your evolution as an attorney, because this is an area you've gravitated to. I mean, this wasn't your original part of law, but as you were doing more of this and getting interested yourself and so forth, this is kind of your full-time gig, right? You've set aside some of the other things you were doing to focus on this. And if you want to come out and meet Mauricio, you got to think about the secrets of successful syndication coming up in early March. We're going to be in Dallas, Texas. It's a 2-day event. It is a lot, but you'll be around amazing people. We've already got more than 130 people signed up. Wow. It's going to be a lot bigger than that. Just get all the details on the website at realestateguysradio.com under events, the secrets of successful syndication. You've been doing that with us since the very beginning.
Yeah, I've lost track of how long we've been doing it, but I've been to all of them.
It's a lot. I think 8 or 9 years now.
Wow.
But let's talk about the fact that when you are building a business as a syndicator. So now we're not talking about the passive investor. We're talking about the person raising the money. A lot of folks, this is just a way they find a great deal. It's a little bigger than they can personally do, so they bring along a few friends. Great. Hire an attorney, get the work done, get the disclosures, go do the deal. But there are folks who get the bug. We meet a lot of these people, right? This is what they want to do. And if I'm going to make this my career, I'm going to raise money for deals, what else do they need to be thinking about outside of the specific deal, management and setting up entities and some of that stuff?
Yeah, so the first thing that comes to mind actually is just if you're doing this sort of long-term, full-time, it's just working on gathering your investors, right? You don't have to go find investors every time you find a deal. And if you're going to be doing a lot of deals, it's time to start farming, right? Or fishing. It's starting to add value to your community so you can actually get investors onto your list so that when you do have a deal, you're not looking for investors. You've got a sort of a herd, you've educated them, you've given them value. So that's kind of the first thing that comes to mind. And the second thing is just making sure your entity structure is in place. And that's one of the things I've got a report, 8 critical steps to practicing safe syndications. And that's actually the first one is putting your entity structure and your asset protection structure together. Because even before you start, there are things that you can do in order to get everything lined up. You don't have to wait until you actually find your deal to do it. Each deal will have its own entity because there are obviously different investors, but your overall structure and how you're gonna run your real estate business, we talk about a lot of that with investors, especially the first time, because we need to set up the entities properly, set up their branding, set up their website, and there's a lot of things that need to go into the website that you can and cannot do. That's sort of probably a whole new podcast, but I talk about it in that report, the 8 critical steps, and it's maintaining a proper website. because depending on what exemption you use, that may prohibit or limit the kind of information that you put into your website. So there's good stuff there.
Over the years in our Resource Center, we've had lots of these great little reports and articles that you do. This is a brand new one, 8 critical steps to practicing safe syndication. But when we come back, we'll tell you how you can get a copy of that for free. Some of the things we talked about today and some of the things to be thinking about. The basic premise I want people to come away from is that this is a great business to be in. There are some legal ramifications, not to scare you off, but just to make sure you're dotting your I's and crossing your T's. And when it comes to attorneys, you want to hire one early in the process. The worst time you have with an attorney is when you hire them after you've been sued. So ounce of prevention, right? I always tell people it's never too early for them to talk to you.
It's not even talking to me before they get sued. That's a lot of times I will get a client or a potential client that calls me later on in the process. They've already sent out information. They're already accepting checks. And at some point, if you've blown your exemption, again, once the cat's out of the bag, you can't put it back in. So they may want to do it a certain way, but because they've taken some steps that are not allowed, that's going to prohibit them from doing what they want to do. So one of the things that we do right at the beginning is we identify what exemption we want to go with, and then we outline the things that we can and cannot do pursuant to that particular exemption. You can't do it backwards because you could blow an exemption if you come too late.
Yep. All right. Good stuff. Well, we're always excited to have you at the event, March 2nd and 3rd in Dallas, Texas, The Secrets of Successful Syndication. If you can't make that one, we'll do it again in September. We do this event twice a year. This time, though, in March, we're going to have another attorney on the stage, and he's kind of a big deal. George Ross, who's been in practice for nearly 50 years as an attorney, amazing guy. He is not a syndications attorney. He doesn't do what you do, but I'm very excited for you guys to meet and to hear his stories. He was, Donald Trump's personal business attorney for many, many years, and that's kind of polarizing these days because now that it's President Trump and not real estate investor Donald Trump. But I will tell you something about George Ross. The minute that Donald Trump announced his candidacy, George left the Trump organization on good terms. It's all good, but he was just at that age. He's nearly 90 years old. But the amazing thing about George Ross is his breadth of knowledge is incredible. He did 700 real estate transactions in Manhattan before he met Trump. I mean, this guy has seen everything. So very excited to have George Ross coming with us, Mauricio Rauld, and a cast of amazing folks. You get all the details on the website at realestateguysradio.com under events. As always, great information. Thanks for being here today, Mauricio.
Thanks for having me. Always love being on.
And thanks for writing that great report, The 8 Critical Steps to Practicing Safe Syndication. If you'd like a copy, just send an email to 8steps@realestateguysradio.com. That's 8 steps. You can spell out the word 8 or just put the number 8, 8steps@realestateguysradio.com. Or we come back, you're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
All aboard! Registration is now open for the Real Estate Guys 16th Annual Investor Summit. Imagine spending an entire week with like-minded investors, world-class educators, and real-world professionals. Returning this year are sales legend Tom Hopkins, international developer Beth Clifford, the authors of Prosper, Chris Martinson and Adam Taggart, and the author of The Creature from Jekyll Island, G. Edward Griffin. And joining us live and in person for his 6th Investor Summit, Peter Schiff. And lots more to be announced. It all begins April 6, 2018 in Fort Lauderdale. Visit realestateguysradio.com and click the tab that says Summit to learn more and reserve your spot. This transformational week is like no conference you've ever attended. Go to realestateguysradio.com and click Summit and make plans to spend a week with the Real Estate Guys and an all-star faculty on the 16th Annual Investors Summit at Sea. Don't miss the boat.
Hi, this is Patrick Donahoe, CEO of Paradigm Life. Wall Street and banks spend billions of dollars per year in advertising with the goal to convince you that they are the solution. But take a look around. None of their advice has worked. If you're listening to this, odds are pretty good that you're already a real estate investor, or at least becoming one. So why do you do it? Is it to hedge inflation, the tax benefits, or maybe it's to get your money away from Wall Street? It's because of these benefits and so many more that I created the Real Estate Investor's Guide to the Perpetual Wealth Strategy. When you combine successful real estate investing with the perpetual wealth strategy, you have the recipe for what has helped the wealthy to establish their financial well-being for decades. You can download the Real Estate Investor's Guide to the Perpetual Wealth Strategy today by clicking the Resources tab on the Real Estate Guys Radio homepage. Don't wait, go download it now.
Hi, this is Kim Kiyosaki. I'm the author of Rich Woman, and you are listening to The Real Estate Guys.
And welcome back to the Real Estate Guys radio program. Thanks for tuning into the show, whether you're doing that on the radio, on the podcast, or because someone forwarded you a link to the show. Any way you're listening is a good way. We're talking today about going bigger in your real estate investing with real estate syndication, putting together bigger deals using other people's money, and always good to hear from Mauricio Rauld.
Yeah, it is. It's been a lot of fun. We've known Mauricio for years. Gosh, it just seems like forever, and has watched him and his career blossom as he's really honed in on servicing the unique needs of real estate syndicators. And of course, he's been a staple at our Secrets of Successful Syndication seminar that we've been doing now for a number of years, because after the financial crisis, we looked around at the landscape and thought, man, the best opportunity right now, maybe it's certainly in real estate, but even beyond real estate in almost any industry, is the opportunity to aggregate capital and to go do bigger deals, because there's just bargains galore. And of course, later on, as we mentioned earlier at the top of the show, the advertising restrictions about being able to solicit accredited investors for your deals came down, and then it just got even better. So Mauricio's been a big part of that, sharing from his years of experience working with us and many other syndicators that have put together deals. And one of the things that I really love about him is the way he expresses himself kind of as the anti-lawyer, the guy that just kind of talks in regular language and gives you common sense answers. But the other thing is, when you're dealing with someone who has really got a level of experience, they know how to help you ask the questions you don't even know to ask, and that's also important.
Well, one of the things I appreciate about Mauricio is hopefully you got from his tone and demeanor, he's not trying to scare you to say, oh, don't do this. It's quite the opposite. He's just saying, if you're going to do this, you need to make sure you're following the law. And the law is fairly straightforward, but like any legal issue, there are a lot of permutations and there's a lot of layers, and you can do it. You absolutely can do it. You just have to commit yourself to learning. Of course, very happy to have Mauricio at the Secrets of Successful Syndication coming up right around the corner, March 2nd and 3rd in Dallas, Texas. If you've missed that one, then you can always check on our website at realestateguysradio.com. We do this event twice a year. And speaking of team, you're going to meet all kinds of folks. We have several speakers, and the one coming up, Mauricio's not the only attorney. We're also pleased as punch to be bringing George Ross to the event for the first time. George, an amazing real estate attorney in Manhattan, one of the most difficult real estate markets on planet Earth. Not only has he navigated that market for years and years and years, he has totally excelled at it, been at the top of his game. He's now almost 90 years old, so come on out and meet George, get your questions answered, get a picture with him. Pretty amazing guy.
Yeah, it's just a privilege. We had a chance to speak with him at an event in New York and got a chance to get to know him, had him on the show, and he doesn't really do very many public appearances, so we feel quite honored that he would take time out of his schedule, travel all the way from New York to Dallas to spend a day with us and our folks. So if you get a chance to come out and make that event, I really encourage you to do it. Can't promise you we'll ever have him again.
Syndication is not for everybody, but it is a great tool, either as a way to invest more passively with someone who's doing bigger deals, or to take your real estate investing career to the next level, where you've got that expertise and experience, and you parlay that through raising other people's money. It works for a lot of folks. Hopefully it'll work for you. Thanks for tuning into the show today. Until next week, go out and make some equity happen.
Hello, this is Robert Kiyosaki, and I'm very excited that I'll be joining the Real Estate Guys for their Investor Real Estate Summit at Sea. Join me, join my friends, join the Real Estate Guys Investor Summit at Sea, and I'll see you out there. Thank you very much.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723. 489-7723, extension 4, or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.